Hello everyone, this is Mank and welcome to my channel. So today we'll discuss about one more stock in the banking sector called DCB Bank. So we'll see the business, we'll see the fundamentals, and then we'll see the technical analysis of this particular company. We'll see the short-term opportunity and we'll see a long-term opportunity as well. So there is quite a good kind of opportunity present in this particular stock. So before we get into all those details, there are 2 points. If you like our content, don't forget to hit the subscribe button. Don't forget to like our videos and don't forget to share it with your friends. This will help us to encourage us to bring more content and more videos for you. And other thing is, it's not a recommendation. Nothing in this channel is recommendation. It's all my personal research. I try to bring as much quality content for you so that you can decide based on that and you can make your decisions. So the decision end of the day is all yours. Okay, now we'll get the ball rolling and start with the company first. So now before we start with this company, I'll tell you this is one of the worst website I've ever seen for any bank so far. It's really completely screwed up. They must change it and must improve the user experience for this website. It took me to understand around more than 5-6 minutes to find out where is the menu and what kind of options they provide and what they do. Since I've done the hard work, I'll bring it to you. So in the quick links, they have options called card and offers. So they give some kind of cards, debit cards and all. And they do savings account, current account. They let you open fixed deposits. They do in trade finance. If you see in trade finance, they do some kind of cash management and things like that, foreign currency services. So they have not given any kind of details what they do. They just write trade finance and they'll leave it. If you go to domestic, they will write some few lines and they'll leave it. So they don't give any information what they do, how they do. For everything else, they'll ask you to contact their customer care or call them or leave your phone number and they'll get back to you. So this is one of the worst website I ever seen. So we can't get any information about the bank, what they do, how they do, and everything on the website. And other thing is for NRIs, if you see what they provide some kind of banking operations services as well. Apart from that, what get them a lot of money is remittance. So they help in remittance also a lot. So this is the only information what you can get from the website. For everything else, it's like they leave your number or contact us. So I cannot explain more what they do, how they do. But insurance, they are a broker company for Aditya Birla Capital. So they sell insurances from Aditya Birla Capital. For Aditya Birla Capital, I've already created one video. It's also a very good company, very good opportunity right now. So I'll leave that link in the description and also on the cards. So if you're interested in that part, you can visit that link and you can watch the entire video on Aditya Birla Capital. It's a very good opportunity right now, and I think you must watch that video. For investment, they sell mutual funds. They sell some kind of brokerage also, demat account. They give some fixed deposits. So this is what the basically company does. I'm sorry you cannot get much information about everything else because the website I'm telling again and again, it's all screwed up. So this is what the entire company does. A small brief for the company. Fundamentals quite interesting. If you see fundamentals, the P is 9.64. That way below the sector P. Sector P is close to 30. So it's around they are 1/3 of sector P. ROC and ROE is quite good actually, 7.06, 9.82. And if I tell you ROC is calculated on last year performance, and last year performance has not been good for this company because this is a small bank and they have been hit very hard when it comes to pandemic. So the ROC is not very great and ROE also not very great if you see for last 12 months, but it was better before this. We'll see that below. Promoter holding is 14.9%, so they are a professionally managed company. We'll show that in down also little later. Debt to equity ratio is 9.87. That's very good actually because it's a bank, as I told repeatedly many times. The more is the debt, better is the bank capacity to lend money. So they have 30,778 crore of debt, and that's a very good point. And now we'll go to the quarterly results. So quarterly results, they were doing actually not great. So they're reducing money from 878 to 69, 837 consistently quarter over quarter. And this is the reason why, because this pandemic is quite a big reason for this company to do bad on quarterly basis. You see on profit and loss on yearly basis, this company was doing very good actually. 459, 536, 717, 916. Every year they have grown their revenue till they reach this particular point 3458 crores. So this March 2021 yearly result was comparatively lesser than the previous year, and it has not grown. And this is definitely the reason of the pandemic. And why I tell you, there are two things: profit margin, so financial profit margin reduced a lot. So this happens when a bank, so financial profit is a term. If I explain you how it works, is that the banks borrow money from other banks or mostly from current accounts and savings account, which is less in interest. So basically, if you invest your savings account in a bank, they'll give you 6 or 7% interest. That's the maximum. Normally they give 4 or 5%. But they lend money at 11%, 12%, 13%, even 15% of loan. So that the difference is the profit margin. So what happened in the case of pandemic, this company, since it's a small bank, it's not a major bank like ICICI or Axis HDFC, their savings CASA ratio reduced a lot, and their loan was more. So because of this thing, their financial profit kept on reducing for last 2 years. So if you see till 2019, it was always increasing. First new bank, it was in loss. Then it was started giving profit, financial profit, 0, 31, 66, 70, 97, 120, exponential growth they have given in last first 6 years. And then when this pandemic thing started reducing their financial profit. And this is the reason why this company is making less money. Same thing will see net profit also, 21, 55, 102, 151, 191, 195, 200, 245, 325. So every time they were making money, but slowly they started reducing. It's only small growth from 325 to 338, and then it almost remains same when it comes to net profit for 2021. If you see the financial profit, it would have been at least 100 crore also. The net profit would have been very great. It would have cost around 440 crores. So it's a huge net profit. That means this company has done good, but the pandemic has hit them so hard that they cannot recover from that effect. But still, keeping that in mind, they have made some money. They have shown good profit. They have not shown forget about loss. They have shown good profit, and that's a very good point about any company. And this shows the strength of any company when it comes to management. So this company has got a very, very strong management. In spite of all the troubles, they are doing very good. And this is the reason we are discussing about this company. The fundamentals are extremely good. 2021 result has not been updated on screener, but the reserves have increased. Borrowings have also increased, and current work in progress obviously zero. And they have done good in terms of your balance sheet of 2021. I'll discuss those points a little later. If you see this ROC, which I told you, it was good. So it was 11%, it was 10%, and this 2021 reduced because I told you it's last 12 months they'll calculate. So it's only 9.64. That means their ROC is also impacting because of COVID itself. So this company has been affected by COVID, and now since this vaccination drive is going on in the country, it's becoming more and more stable now. More and more people are getting vaccinated, and economy is soon going to open up. And also the scientific report of doctors has come that people who are vaccinated, they don't go through that death. So they are not dying. They might get infected a little bit, but they are not. There is no death rates for them. It's a very good positive news, and this kind of positive news are good for the company which are highly stressed due to COVID. And DCB Bank is one of the companies which are highly stressed because of COVID. And that's why the reason is there is good opportunity present, because this company will recover very fast from here. And we'll see that in the technical chart what kind of opportunity present. So you watch till that time. Shareholding pattern, if you see, only 14.88% with promoters. But FIS and DIS is very good holding in this company, and public is around 31%. So any company which has good FIS and DIS and promoter holding is less, and it's a good fundamental company. That's a professionally managed company. So this company is managed by good people on the boards, where promoters are not like majority decision makers. So it's a professionally managed company. So it's a good thing about the company also. So we've seen the bank what it does through their screwed up website. We have seen their fundamentals. This company is very strong on fundamentals. Now we'll see the charts. Before we see the charts, few points which I want to tell you about DCB Bank, which will make it more clear to you. So these points are related to March 2021 financial results, which are now updated on the screener. So this is the NPA is accounted in the March quarter for previous quarter. So I'll show you this. I forgot actually the NPA part has increased a lot for this bank. So if you see, NPA has increased from 1.96 to 4.09, that is gross NPA. Net NPA increased from 0.59 to 2.29%. So this happened because of Supreme Court law that you cannot show the NPAs, and they have shown the entire NPA in this quarter, this result actually. And so they have accumulated all those previous NPAs and shown at once. So now this thing all been cleared, and whenever the next result will come, that time NPA will reduce drastically from here, because they have covered it in this quarter. So that's also a positive sign. This might look a deterrent for you, because it's a drastic increase from 0.59 to 2.29. It's almost 4%. But that is because they have made a lot of provisions, and also they have not provisions, they have included all those previous NPAs in this NPA. So now when the next quarter comes, this NPA data will go up, and the new data will be much lesser than the before. So it can go much lesser than 0.59 also. So this is what they are trying to do. So fundamentals are strong. This company has done good. So you can understand why this thing. So I explained it explicitly why this NPA has increased. So this can make you more clear about what kind of future this company is going to plan, and what kind of things are coming up for this company in the future. This is how the NPA and everything looks like. So as well, back to this point. So NPA is accounted quarter on quarter increase in revenue from retail banking. That's very important. And high provision has been made for COVID second phase. So they made quite a good amount of provision. If you see financial results, that's also impacted their quarter results also for this quarter, and that is why the price is not moving up. Reserves has increased for the financial years. That is not visible on the website, but it's for the, if you see financial statements, reserves have increased, and that's quite good because this company has been increasing reserves for always. So if you see the reserves balance sheet from 200 crores, from 399 crores to every time they increase to 3,111 crores, and this time also 3,000, around 300 or 3,400 is the reserves in 2021. So that's a quite consistent increase reserves for this company. Almost 8 times they have increased their reserves over a period of 11 years. That's a very good point for any company, any bank. We'll go to technical analysis. So technical analysis, if you see from 1 year perspective, right now this is creating, I'll remove this data, I'll show you how it works. So there's a good cup with handle pattern which is coming up for this particular company. So this is I'll make it a 1 year timeline, and then we'll see. Because pivot time is not clearly visible. So this is remove the drawings. So this is a good cup with handle pattern. So if you see from here, so this is the base where it's creating the cup. If you see, so this is what the cup with handle pattern looks like. So this is the cup, and this is going to become a handle. So almost has become a handle, so this is going to become a handle. So this is cup with handle pattern. So as I told before, the size of the cup is the target for the next when it comes to cup with handle pattern, and this is only for good, strong fundamental companies. So this is the cup with handle pattern. This is size of the cup, or you can say depth of the cup. So depth of the cup becomes the next target. So this is a quick short-term target. The target of short-term is close to this particular point, and this is around the gain is around how much should be around 16% gain is there in short term. So this is what a short term gain is. Gain is available in this company, but this is not all. Since the company is a fundamentally strong company, we have a good long term opportunity as well. So this company has fallen a lot from this point, and it started in 2020. As I told you, this entire pandemic started, then financial profits started reducing, and this was the impact. Now when things are getting in the better side, this company will slowly moving its journey up and growing to that level. So this is will show you a target there. So this is one target, and this is a very strong resistance for this company. So if you see, it never ever crossed this particular point apart from just one time which is crossed. Then it again came back and tried twice, but it failed. So this is a very strong resistance for this company. And if you see the target from this point, from the current price point to this, is close to 98.8. So almost 99-100% return is there. So even if it takes 2 years for this company to go to this level, I believe it's a very good return. 50%, 100% return in 2 years is extremely good return. And there's a very high possibility this company will touch this level. It will touch very fast. Other chart pattern what is going in this particular company is this. So this is a pattern where this company is creating higher highs and lower lows. So this is what they say. So this is what every time you see from this point, every time the stock going up and falling, it's falling lesser than before. Here also it went up, again it fall, but fall lesser than before. And this is continuous. So this is upward journey. So when the upward journey continues, it will definitely touch the point which we discussed around target of 100% increase. So target of around 212 rupees. And this should not take a long time. Probably it should not take 2 years, but if it takes 2 years also, it's a very good opportunity to make good amount of money. So if you like our video or like the analysis, please let us know in the comment section. Also, this video might be a little longer, and we discussed a lot in detail for this company, so that you get a good overview and good view for kind of investment you want to do or not. So if you like whatever you do, please hit the like button, leave a feedback for us in the comment section. A kind of appreciation will help us, and share it with your friends so that more and more people can get connected with us. And see you later. Thank you so much for watching the video. Stay happy, stay safe.